Welcome, guys, back to Cheddar. Joining us now is Barbara Goodstein. She's the CEO of Tiger 21, a private investment club. Barbara, thank you so much for joining us.
Thank you for having me.
So you guys have quite a few millennial investors. So tell us a little bit about what things millennials are interested in investing about and what's their behavior like when in their investment patterns.
So what we've noticed that millennials are very interested in early stage investing and high-tech investing. So a lot of the people that come to us are wealth creators. They've just had their first liquidity event. Many of the millennials have invested in startups, and now they want to get advice from a community of people that have been investing for a while, that have gone through a similar experience. So they come to Tiger 21 to seek that type of peer-to-peer advice.
And what kind of advice do you normally give them?
So we have a process called a portfolio defense, where the people in the group will go around the room and one person a month presents all of their portfolio, all their holdings, their asset allocation, everything they're invested in. And then they get advice from the other people in the room about what works, what doesn't work, where they have blind spots. And oftentimes the blind spots are fascinating. We had one person in my group who had no insurance policy because he told us he didn't think he was going to die. And so you start finding out things that are missing pieces, and that's what our millennials are coming to us to get that type of advice so that they can figure out their blind spots in advance.
More than 500 members with over $40 billion in assets under management. Were millennials asking you a lot about Snap here in the recent weeks?
So they've been teaching us. They're not asking us, which is very interesting. Our members are learning about technology from the millennials, and the millennials are learning about wise investments, diversification, asset management, different asset classes from our other members. So it's really a very well-run organization where people are swapping ideas back and forth, and the portfolio defense enables everybody to have that opportunity to learn from each other.
What, in terms of your investors that are millennials and your investors that are a little bit older than millennials, what are the difference in terms of behavior patterns of what they're investing in? Are millennials investing in more socially responsible things, or are they doing something different? What are the contrasts?
So the millennials are very interested in socially responsible investing, and they have actually brought some of the rest of the group along with them. So they're teaching the rest of the group both startups, high tech, and then socially responsible investing. There was a period of time where people didn't think that socially responsible investing could be profitable, and now we've learned from our millennials that it can be both profitable and socially responsible. So everybody's sort of teaching each other as we go along.
So how is the exchange of ideas facilitated? Is most of this happening digitally? Are there actual meetups, events? How are you exchanging ideas?
So we have actual meetings that take place once a month, and we have groups of 10 to 16 people that meet once a month across North America, and now we've just opened in London. So people get together in their group once a month and they exchange ideas. They go through their portfolio, their investment performance. And as I said, we have one portfolio defense a month. And then people talk about asset allocation, and we raise other issues. So we talk about different opportunities, things that are concerning people, and we sort of process information. We also have 2 speakers that attend every group, 2 outside speakers. So over the course of the year, we bring in close to 700 speakers throughout all the groups, and our members can rotate from group to group. So if you join a group in Toronto, you can participate in a group in Los Angeles if you're interested in learning about what the members in Los Angeles are doing.
As Kristen had just mentioned, you guys have $48 million or $1 billion in investments and assets that you guys are working with. So what are these super uber rich investing in? What are they doing? They're probably not millennials, but what are they investing in that maybe I should be doing
some of them
right
are
now?
millennials, and most of our members are investing in private equity. So we've seen dramatic growth in private equity over the past few years. Right now, private equity is at 21% of our members' total asset allocation. That's up from 12% 10 years ago.
Why is that? I mean, you can put your money in a hedge fund, you can put it all sorts of places. Why PE?
So that's the place that people know. They're sort of going back to basics. They're going to the categories and the space that they knew best, the businesses that they built, and then they're also getting advice from other members. So they get investment opportunities from other members in the room. They're investing with each other, and they see that there's more upside, more growth opportunity in private equity than there is in other in other forms of investment. So public equities has actually declined dramatically. It was 30% in 2008. Today it's 21%, whereas private equities has gone from 12 to 21%. So we're seeing a trade-off between public and private equities. Hedge funds also is dramatically lower than it was before. It was 12%. Today it's 6%.
And we just showed a graphic here just a moment ago. The most popular equities: Apple, Google, Microsoft, all tech companies. Why is it that tech is so popular?
Well, tech is popular because it drives significant returns, and interestingly, we also have ETFs are among some of the biggest investments. So people want returns, and they see tech can deliver those returns over a long period of time, and then they're investing in ETFs because they find that the ETFs, when you strip out those big fees, also deliver significant returns. So in public equities, people are looking to drive returns. That's been the focus. That's the element that people discuss in the portfolio defense, and those are the stocks that can deliver those type of returns. Private equities can deliver the same or more, which is why we've seen a shift towards private equities across our membership.
Well, let's talk more about that component. Obviously, several things at play here. As you mentioned, hedge fund performance just generally has not been that bad, and people would say in the public equity market, now finally, it might actually be a time for hedge funds to outperform, because we had seen just everything rise as the Fed had kept interest rates so low for so long, and finally, slowly starting to pull off some of that gas a little bit. So maybe it is the year for hedge funds, but you had talked about for PE, that's something that they know, they can see. They're saying that they can see outsized returns. Do you see most people within the club come from a PE background? How is that something that they know per se?
So they're wealth creators. So they come from a background where they built their own businesses. Most of them just had a liquidity event in the recent past, and that's why they joined this type of group. They're looking for unbiased advice. They're looking for support from their peers. This becomes a personal board of directors. So you're looking to people who have nothing to gain, only to give you the best advice possible, and that's how they get there. They are focused on the business areas that they built. They're wealth creators. They built businesses across different categories, and those are the categories that they typically continue investing in.
How hard is it to get into the club, get into Tiger 21?
So we look for people who have unique integrity. They're wealth creators. They've achieved a certain level of success. We don't want them if they're not going to benefit from being here. You have to be transparent and open. You have to share with the rest of the group. And we expect that they'll do that, and the group will share with them. So
share ideas?
Share ideas, share investment opportunities, share decision making, share personal stories. So it really is a transformative experience. People say that this is something that really changes their life. They bring all of their investment ideas, all their personal decisions to the group.
But is there a threshold in terms of how much money you have to make? I mean, to invest in a hedge fund, there is a threshold, obviously, and so I'd assume that those thresholds would be passed on to anyone that wants to join Tiger 21. What are some of the physical, actual, tangible thresholds that they have to meet?
So the threshold is we advise people to have above $10 million in liquid assets, because then they can really benefit from the advice of the rest of the group. They can benefit from the investment opportunities that we bring to them, and they can benefit from being with people who are in a similar position. So this is really a peer-to-peer learning organization. People learn from each other's experiences, which is why our millennials are anxious to join us, because they find that they are getting lots of interesting advice and experience from the people that they're sitting with.
There's not a password to get into the door, is there? Like a members club or anything?
No, there's no secret password to get into the door. It's more that you have to have, as I said, integrity and proven success, and you have to be willing to share your ideas and have people share their ideas with you.
All right, Barbara Goodstein, CEO over at Tiger 21. Thank you so much for joining us
Thank
today.
you.
Thanks.